Hi everyone, this is the Encyclopedia channel. Over the years, I believe you have heard topics such as economic crisis or economic recession. So what exactly is an economic recession? When was the most profound recession in history? In an economic crisis, what should we do? Economic recession refers to the negative growth of economic activities in a long period of time, that is, the decline of the total economic volume. It usually refers to the continuous decline of the overall economy of a country or a region. Usually caused by a variety of factors, the most common of which is economic cyclical fluctuations. A recession will have a profound impact on the entire economic system, including declining production, rising unemployment, reduced consumption, business closures, etc., as well as social and political systems. During a recession, governments usually take measures to stimulate the economy, help businesses and individuals tide over difficulties, and protect economic and social stability. However, for a long-lasting economic recession, government intervention may have limited and negative effects because the government usually needs to borrow and spend to stimulate the economy, which may lead to problems such as fiscal deficit and inflation. It is also easy to cause social dissatisfaction and popular tension, which may lead to social instability and political chaos. To avoid a recession, governments and businesses take steps to reduce risk and increase stability, such as maintaining financial stability by increasing productivity, increasing investment, and reducing debt. In the history of this world, mankind has experienced many economic recessions and crises, which have had a serious impact on the entire world economy. Let's take three of the most famous economic recession crises to understand this phenomenon. The Great Depression of 1929. It was one of the worst recessions of the 20th century, starting with a U.S. stock market crash and rippling around the world. In the early 1920s, the U.S. stock market was booming, but there were also some signs of instability. A bubble in the stock market is formed as many people borrow money to buy stocks. On October 24, 1929, the stock market crashed, resulting in huge losses for investors, the collapse of the global financial system, and a sharp drop in productivity. This economic crisis lasted for nearly 10 years and seriously affected the global economy and society. The impact of the Great Depression was not just economic, it had profound social, political, and cultural consequences. Many lost their savings and pensions, and unemployment skyrocketed, leading to social discontent and violence. In politics, populist and extremist political movements have emerged in many countries, such as the Nazi Party in Germany. Culturally, the Great Depression also affected art and literature, with many writers and artists depicting lives of poverty and misery. In response to the Great Depression, the government took various measures. The U.S. government implemented new policies, including increasing public spending, regulating the banking industry, and stimulating economic growth. Other countries have taken similar steps, including increased public works and trade protectionism. These measures helped cushion the economic impact of the Great Depression, but the global economy did not gradually return to normal until the end of World War II. The global financial crisis of 2008. One of the most serious economic crises in the 21st century began with the subprime mortgage crisis in the United States and spread to the whole world. Many large financial institutions collapsed, leading to global stock market crashes and economic recession, and many countries adopted large-scale economic stimulus policies to restore their economies. The global financial crisis in 2008 originated from the bubble in the U.S. real estate market and the subprime mortgage crisis. At that time, the housing market prices in the United States rose sharply, and some homeowners purchased houses through subprime mortgages. However, as interest rates rose and loan rates adjusted, these subprime lenders were unable to repay their loans, and a large number of subprime loan assets proved to be non-performing assets. With the continuous escalation of the subprime mortgage crisis, it has led to a global financial system crisis. Many financial institutions and banks have large subprime mortgages, whose value is constantly falling, resulting in huge losses for these institutions. In September 2008, Lehman Brothers, the fourth largest investment bank in the United States, declared bankruptcy, which triggered financial panic and market collapse around the world, and the stock and bond markets were in chaos. The crisis also triggered a credit crunch and a drop in global trade, leading to a contraction in the global economy. Companies are suffering huge financial distress, unemployment is soaring, and the global economy is doing very badly. The U.S. government has taken several measures to deal with this crisis. In September 2008, the U.S. Congress passed a $700 billion Financial Stability Act, which provides rescue funds and assistance programs for financial institutions. The U.S. Federal Reserve and other central banks have also engaged in massive monetary policy and quantitative easing to provide liquidity and support economic activity. In addition, the government has introduced a series of stimulus measures, such as tax breaks and fiscal spending plans, to promote economic recovery. Other countries around the world have taken similar measures to deal with the crisis. The European Central Bank has provided liquidity support, and European governments have implemented fiscal stimulus programs and financial rescue programs. Emerging economies such as China and India have adopted various policy measures, including cutting interest rates, increasing fiscal spending, and strengthening monetary policy. The global financial crisis had a profound impact on the global economy, but after years of hard work, parts of the world are gradually recovering from the crisis. After 2010, the global economy gradually recovered, and the stock and bond markets also stabilized. However, the impact of the crisis persists in some countries, such as Greece and Spain, which performed worst economically during the crisis and are still grappling with the rest of the fallout. In the years after the crisis, countries stepped up financial regulation and reforms to avoid a similar crisis from happening again. The United States passed the Dodd-Frank Act to enhance financial regulation and protect consumers. Europe has also launched a series of financial regulatory measures, such as the establishment of the European Banking Supervisory Agency and the European Financial Stability Fund. In addition, the crisis has also prompted countries to pay more attention to international economic cooperation and coordination. At the G20 summit, leaders of various countries took coordinated measures to promote the stability of the international economic and financial system. The COVID-19 economic crisis in 2020. This is the most serious global crisis triggered by the new coronavirus epidemic. After the outbreak of the new coronavirus in 2020, many countries have adopted measures such as blockade and social distance to control the epidemic. Severe recession. In order to prevent the rapid spread of the epidemic, countries around the world have had to implement travel restrictions and blockade measures, and the tourism and aviation industries have been hit hard. A large number of hotels, airlines, and tourist attractions have closed, leaving millions of people out of work. For example, the tourism and aviation industries in Europe have been hit hard during the epidemic, with many airlines going bankrupt and hotels and tourist attractions closed, resulting in a drop of more than 80% in the total revenue of the global tourism industry. The prevention and control of the epidemic and the blockade restrictions have also seriously damaged the global supply chain. Some countries were unable to produce the required materials, and other countries were unable to export their products, causing severe damage to the global economy. China is an important center of global manufacturing. Due to the blockade measures, a large number of factories have been closed and production capacity has been severely damaged. As a result, companies around the world cannot get the parts and products they need. At the same time, global economic activity has slowed down, demand has fallen, energy and commodity prices have fallen sharply, and crude oil supply has increased in oil-producing countries, resulting in a sharp drop in crude oil prices. In addition, during the epidemic, commodity prices also fell, especially the prices of commodities such as copper and iron ore fell sharply. This has taken a toll on commodity exporters. In this crisis, a large number of traditional retail industries have been hit hard, and only online services and e-commerce have been boosted. As people are quarantined at home, shopping and entertainment demand has increased, resulting in online services and e-commerce platforms such as Amazon and Zoom. On a global scale, The economic crisis caused by the new crown epidemic has a wide range of impacts, involving employment, enterprises, trade and financial markets and other aspects. But some countries have begun to recover as vaccination programs accelerate and fiscal policy stimulates. However, due to the continuous impact of the epidemic, the data for 2022 show that the global economic growth has slowed down and the economies of some countries have declined, which shows that the impact of the epidemic on the global economy still exists. In response to the impact of the epidemic, governments and international organizations have taken a series of measures to stabilize the economy and support businesses, including fiscal stimulus and monetary easing. On the fiscal side, many countries have adopted large-scale fiscal stimulus measures, including direct cash distributions to the people, increasing medical facilities, providing unemployment benefits, etc. For example, the U.S. provided $2.2 trillion in funding to individuals, households, and businesses through the Coronavirus Aid, Relief, and Economic Security Act, while also funding the healthcare system. Several countries in Europe have also adopted similar fiscal stimulus measures. In terms of monetary policy, central banks have also adopted accommodative policies to promote economic recovery. For example, the Federal Reserve has taken a series of measures, including cutting interest rates, increasing liquidity, and buying bonds. The European Central Bank has also taken similar measures, including expanding its bond buying program and providing long-term low-interest loans. In addition, countries around the world have also strengthened the construction of healthcare systems to meet the challenges of the epidemic. Many countries have also accelerated digital transformation and green economy development to promote sustainable economic growth. In addition, the new crown epidemic has also changed people's consumption habits and lifestyles, further promoting the development of digitalization, online services, and remote work. These changes also bring new economic opportunities and challenges. Under the influence of the epidemic, many companies have been hit hard, and some are even facing bankruptcy and closure. But there are also some companies that have faced the difficulties in the epidemic and adopted some innovative methods to deal with the epidemic. For example, many restaurants and retail stores have stepped up their online sales and launched online ordering and delivery services. Some companies have also shifted to produce anti-epidemic supplies, such as masks and protective clothing. These innovative approaches not only help companies tide over difficulties, but also lay the foundation for future development. The new crown epidemic has brought a huge impact on the global economy, leading to a global recession and rising unemployment. Although the impact of the epidemic continues, people's ability to innovate and adapt has also been tempered during the epidemic, providing new opportunities and challenges for future economic development. Although the economic recession has brought a series of adverse effects, it is also unfavorable for most people, but it also provides opportunities for some people who dare to innovate and meet challenges. Capable and powerful people can make profits by starting a business and investing in low-priced assets. Entrepreneurship. In times of economic recession, some businesses in traditional industries may go bankrupt, but there will also be opportunities in emerging industries. For example, during the COVID-19 epidemic in 2020, due to the increase in online demand, some emerging internet companies such as Zoom, DoorDash, and Peloton ushered in rapid development. The services and products provided by these enterprises meet the market demand, have been widely recognized by users, and also provide opportunities for entrepreneurs. Invest in low-priced assets. During a recession, the prices of assets such as stocks and real estate typically fall, so some investors may take advantage of low prices. For example, during the global financial crisis in 2008, Warren Buffett, a famous Wall Street investor, invested $5 billion in Goldman Sachs and finally obtained high returns. Ordinary people, too, can change careers or learn new skills. During a recession, some occupations may face more pressure, and people can use their spare time to further improve their education. These individuals will be more competitive than others in times of economic recovery. But at the same time, there may also be new jobs and fields where people can seek out jobs in other industries, thereby improving their employment opportunities. For example, during the 2008 financial crisis, due to mass layoffs in the banking and finance industry, many people began to seek employment opportunities in other industries, such as healthcare, education, technology, etc. During the COVID-19 pandemic, many people began to learn new skills, such as remote collaboration tools, cloud computing, artificial intelligence, etc., to adapt to the new work and lifestyle. Plus, people have to build up emergency savings, and in a recession, people are at risk of losing their jobs. Emergency savings for the unexpected that may arise. This will help people cope better in times of recession. Facing a recession, people should look for new opportunities, improve their education, learn new skills, find new job opportunities, and build emergency savings. These will help people meet the challenges and increase career opportunities during the recession. In conclusion, economic recessions and crises have occurred for different reasons in history, but all have far-reaching impacts on the economy and society. Understanding these historical events can help us better understand the nature of recessions and how to deal with them, so that we can better deal with possible future economic crises. What insights do you have on the recession? Welcome to leave a message in the comment area to discuss with everyone.